mà chưa xong.
Okay. um, Good evening, everyone. So um, I'm sorry for there is one person she's already in the room, so I signed her in the room in the group one. So yeah, so welcome to the last course of to the last class of our course. So today is the presentations. So we will begin the presentation at 8. So I'm gonna assign you to the rooms now, so you can discuss with your group for last time, and so you can finish everything, okay? And so if you have any question, please ask in the chat. If you don't have any questions, I'm gonna assign you to your rooms now, and I will close the room at 8, okay? And we will use the name of the number of the group for the order of the presentation. So group 1, 2, 3, 4, this order for the presentation, okay? So I don't know if there's at least maybe one person in the chat that could confirm that you hear me and you see me, and that is okay. But maybe you are already, hi, okay, me. So good morning, okay. Okay, so great. So it was just a technical check. Hello, everyone. So, okay, I'm gonna assign you now to the rooms, okay? And so I will go quickly into the rooms to check if everything is okay. And we will move back to the main room at 8 and begin the presentation, okay? Okay, so I'm assigning you guys now.
the second one, we will calculate the free cash flow. And the third one, we will calculate the discount rate. And from that, we will calculate the net present value and also try to calculate the internal rate of return. And from that result, we will give conclusion on whether this project is feasible to be executed or not. So now for the step.
Sorry to interrupt. This is a prof here. I don't want to hear too much, so it's a surprise for me later. So just to check if everything is okay with you, I receive your presentation. I see you are training now. So is that okay for everyone?
Yes. Yeah.
Okay, so I'll let you train. Okay, I go to the next room. Sorry to interrupt. See you at 8.
Professor.
Yes.
Sorry.
Yeah.
Could you let us know how long you let us to present for the group?
Yeah, it's yes. So we have four groups and 2 hours.
Yes.
So yesterday, all included the presentation was around 30 minutes. And so usually what I did is that I ask question during the presentation before I forget. Okay, so I can interrupt you. And other students only can ask question at the end of the presentation. So the presentation should be like 15 to 25 minutes.
Okay.
Okay.
Thank you.
Yeah,
thank you.
You're welcome. Good luck. Good luck.
You,
Good training.
Merci.
Merci.
Thank you.
See you.
See you.
See you.
Dạ, chị nghe rõ
Em
chưa?
có thể bây giờ thì rõ hơn rồi.
Hello everyone.
Yes.
Hello group.
Hello.
How are you?
Yes, we good.
Yes, we good.
Okay. So did you so you already sent me your presentation, right?
Yes.
I received that
Yes.
this morning. Is Mr. Hian who sent us the presentation,
Yes.
right?
Yes.
Yes.
Yeah. Okay.
Yes.
So do you have any question or
Do you have any question for us?
No. I prefer to just for you to know one thing I can say to you is that I will not look at the presentation before you present. Okay, I will not read your document before, so it's a surprise for me, and so I will see if I can understand everything without reading before. Understand?
Okay.
So just keep that in mind, that you have to be clear. Okay. And so so yesterday the presentation all included with the question was about 30 minutes.
Okay.
So it's like 20 minutes you present plus the questions and everything. This is 30 minutes.
Okay.
Okay. Okay.
Okay.
Do you have any other questions for me?
Not yet, sir.
Okay, you're fine. Okay, so I'll let you train.
Yeah.
Good luck and see you at 8 p.m. in the room. Okay.
Yeah. Okay. Thank
Okay.
you.
Bye bye.
Thank you.
Thank you. Hello, group 3. How are you?
Hello, Professor.
Hello.
How are you?
We're doing great. How are you today?
Yeah, good. Looking forward to hearing your presentation. So you did not send me yet for the moment the presentation, right?
Hi, Professor. I cannot hear you. Can you?
Yes, you can hear me?
Rồi vậy thôi, em bắt cho chị mở của em.
Can you hear me?
Chị có tại nhiều máy á. Đúng rồi. Bây giờ chị mở cái máy điện thoại nói là cộng là nó không bị nè. Cái máy của chị là đang là bằng điện thoại kia. Điện thoại đó bây giờ cứ sao mua the order chị đang bằng điện thoại chị nói mà chị sao chị mở lên nữa thì nó lại có nhiều này. Chị ơi, mình sử dụng điện thoại thôi. Điện thoại làm sao là tốt nhất? Thì để chị log in vào điện thoại chị nha. Sorry, Professor.
No.
Technical problems a little bit.
Chị Ly trước xong rồi chị mới vô bằng cái đường này được.
Một cái là mình dùng để sao mà
Em muốn em muốn
rồi, ok.
phải đó đúng không? Rồi.
Phương nói thử coi. Hi, Professor. Can you hear us again?
Yes, I can hear you.
Okay. So, tại vì
Sao cứ để thôi.
đúng không? Nói càng gần càng tốt. Nghe cái sao không? Okay, we are good.
Okay, so I just wanted to know if everything was okay with you, if you had any questions, or if you...
We're having some depressions, but we have made our effort to cram all of the knowledge and in a short stage of time. But we are very proud of our presentation.
Okay, great. So you you can send me the presentation by email if you want, right? When you're ready.
Yes. Okay. So I'll send you right now.
Yes, when you finish before
Just now.
Before 8. Okay, so if you can send it right now, it's okay. I will not look at the presentation before 8 because I want to have the surprise. Okay, so I want to hear everything from you so I can see if I can clearly understand. Okay. And yesterday the presentation were about like all included 30 minutes, okay, because we have 4 groups and 2 hours, so 30 minutes per group. And so
30 minutes.
Yeah, 30 minutes. And so when I have questions, I ask directly during the presentation, okay?
Okay.
Just for you to know. And other students cannot ask questions during the presentations. They can only ask questions after the presentation. So I'm the only one who can interrupt you. So you know, and so it's not coming from everywhere. You know, you have only one one person who can ask question. Okay, so get ready for 15 to 20 minutes presentation. So with the questions and everything, that should be 30 minutes.
Okay. Okay, I got it. Yeah.
Okay, so yeah, please send me the presentation, and we see in the main room at 8 p.m. then.
Yeah. Okay. So 8 p.m.
Okay.
Thank you so much.
Thank
Goodbye.
you. Yeah.
See you later.
See you later. Hello, group 4. Are you hearing me?
Yes.
Hello, yes. Are you okay?
Yes.
Maybe we can make a test, sound plus image, to see if it's okay.
Professor, can you hear? Can you?
Hello, I can hear you. Can we make a test with the video?
Yes, Professor.
Yes. So I can hear you. Just wanted to make a test with the video to see if it works well, to anticipate for the presentation, if it's possible. Okay. Okay, that's great. That's great. Hi. Are you okay?
Yes.
Okay, great.
Very well.
Okay, okay, great. So do you have any question for the presentation? Or are you ready already?
Yes, we are discussing. Yes,
Okay.
we got.
Okay. And so I'm not sure I received the presentation for the moment. So do not forget to send the presentation by email to me before 8 p.m.
Yes. Yes.
Okay.
Yes, we will. Yes, we will.
Okay.
Yes.
Okay. So I'll let you, if you don't have any further question, I'll let you finish to prepare. And so we meet again 8 p.m. In the main room.
Yes.
Okay.
Yes.
Okay. See you. Bye.
Tám số 8 chị.
Ôi, sao vậy?
Okay. Okay, so I think we are ready now. So let
Okay, sorry. I was connecting my headphones is better, so I can hear you better. So now we are all in the rooms. So in the main room, so it's time for the presentation. So as I said, we're gonna do in the order of the group. So group 1, 2, 3, 4. So the presentation will last, we have 2 hours to finish the course. So it's gonna be like 30 minutes per group. So what we can do is that, so you present and I will ask questions during the presentation. Okay, so I don't forget, and maybe it's more interactive this way. And maybe for if the other groups would like to ask questions to the group, maybe they can wait for the end of the presentation to ask questions through the chat. This is what we did yesterday. It worked well. So if it's okay with you, we can do like this. And now I think it's time to give the opportunity to group 1 to present their project. So I'll let you share your screen and open your mics. And please, everybody, other groups, you close your mics. The only mic, group 1. Okay, thank you.
Thank you, Professor. My name is Tuan. I will be the first one to present our case study today. And once again, good morning, Professor, and good evening, everyone. Can you see my my slide?
Yes, I can.
Thank you. We are very happy to be the first team today to present our project to all of you. And the project is about the school bus service investment. And we will consider a project of a private preschool in Ho Chi Minh City. Our team have six members from 2 tracks, corporate and banking track, and 4 from corporate and 2 from banking track. We will move to directly to the project with the brief information first. Sakura Montessori International School is a private preschool, and they are considering to purchase 10 school buses to transport preschooler from home to school and vice versa. And they expect the buses will be delivered at the beginning of year 1 and be used during the next 3 years before being replaced by another. We will move to some key assumptions to calculate the NPV. We have to use some assumption based on the realities and based on our expectation. And the first one is about the initial cost. That is about that's about the investment in the buses, 10 buses. We just cost first $1 million US, and the cost the cost is a straight line depreciable over the next 8 years based on the regulation of Vietnamese law. The buses have to be depreciated from at least 6 years to 10 years. Then we expect the buses will down to salvage value of $1,000 US in year 4. after liquidate that buses. The second assumption about the
sorry, just one question for salvage value, $100,000. That's for the four buses.
The sale price, yeah, for
selling
buses.
price for 4 buses.
Yeah, for buses.
Okay.
Before tax, yeah.
Okay, but what's the book value? What the book value at the time? Say 1 million over 8 years. So it means that the book value is 500 after 4 years, right? 500.
Yeah, we will use the periods of depreciation 8 year. That means 13% depreciation each year.
Okay.
After 4 years, we will have a total 36% of book value is depreciated.
Okay.
And
okay, so
yeah.
Okay, so because if it's 8 years depreciation, if you sell after 4 years,
yeah,
so after 4 years, that's 50% of depreciation, right? Okay, because so that my question was if so it means that you buy 4 buses for 1 million. So my question was 100,000. Is it for 1 bus or for 4 buses?
4 buses.
4 buses. Okay, so you will lose money. You will lose money, right? You will sell at a lower price than the book value.
Yeah. Pardon.
If I understand well, because the book value will be 500,000.
Let me check.
Yeah.
We have the sandwich value here. Let me check the book value.
Yeah, because if it's a straight line depreciable for 8 years, after 4 years, that's half of it, right? So it's 500,000 USD left for the book value. So that's why I was surprised to see salvage value 100 because it's lower than the book value. So I was wondering if it was for 1 bus or for 4 buses. Because if you buy, so you buy four buses, right? You get 4 buses. That's it.
Yeah, here's the book value.
Oh, no, 10 buses. Okay.
10
buses. Okay.
Yeah. 10 buses. Yeah.
Okay. So 10 buses, but still, so salvage value for 10 buses.
Yeah.
Okay, so maybe we can move on to the rest. Sorry to interrupt you so early. So don't be stressed out being interrupted so early, because it's just that it struck my eyes. Maybe you can move on, and certainly we will talk about salvage value later. But you put that aside for the moment, and please go on with your presentation.
Sure. The second assumption about the sunk cost. That's the cost the school already spent $2,000 on the marketing survey, which is for the purpose to assess the attractiveness of the bus service. Yeah, and the next assumption about the cannibalization and externalities of the project. We don't have add on the cannibalization, but about the externalities, we based on the surveys, the buses will increase. The bus service will increase the number of students joining the school. The number of preschooler of the most recent year now is 1,000 students, and expected to increase 2% per annum without the bus service. But if they launch bus service, the number will is expected increase by 3% per annum. And based on the tuition fee and the corresponding cost of goods and services, we will calculate the externalities of the project. That's again. And the next assumption about the expected number of users, that means the preschooler using the bus service. And also based on the marketing surveys, the results of that, there are 60% of preschoolers who are going to use the services, and the usage ratio is expected to be unchanged during the next 3 years. About the unit price, we have the price for average price for bus tickets is set at $1,000 per year each ride, and will be unchanged during the period. Some very important assumption about the tax expense. We have two kinds of tax. The first one is a value-added tax at 10% to calculate the cash flow from the asset sale. And the second one is income tax to calculate the tax for corporate income. The third, the seventh assumption is about the operating costs and other capital expenditure. We have, they include driver salary for 10 drivers with average weight is about $6,000 per year each driver. That include all social insurance and health insurance. The second one is gas cost. It cost $3,600 in years 1 and is expected to increase by 1% per year. Another cost about the parking, that means the rental cost for the garage is cost $10,000 per year and be constant. We have more equipment expenditure when we run the garage. We have to purchase new equipment, and that costs $100,000. We use the straight line depreciation over the next 8 years, and all the equipment will down to salvage value of $20,000 in year 4. The final cost about the general and administrative cost, that include the repair and maintenance cost of $4,000, and that's fixed by that's fixed by a 3-year contract of maintenance, and another cost about the administrative cost of $3,000. We have 2 more assumptions about the working capital.
Sorry, can I interrupt you for 1 or 2 questions?
Okay.
It's more, so it's an interesting project because it's quite original, and it's we can see what it is, you know, bus, you know, the drivers, what are the costs, you explain the costs, so at least you don't do a percentage of the sales, you show some potential cost and everything.
Yeah.
So that's interesting. We can imagine your project. So my questions are not very finance, it's more practical questions. When you do something like this, like you pick up young kids, right? Is that young? So
yeah.
Okay. So do you think in the cost we should think about specific? Do you need some specific government authorization to do a business like this? Because maybe it's dangerous for the kids. So do you need to have a special license to do that kind of activity, or?
Yeah, in reality, we have to follow some regulation from government to launch these services, because it's about the children. I mean we have to follow some regulation as rules to adapt the requirement from government before launching this service.
Okay, and do you think you need a special insurance also?
Yes,
Because,
yeah. I think when we buy a bus, we not state here the insurance for car insurance or bus insurance.
But more, I was thinking about the kids insurance for kids if kids can have accidents.
Yeah, it might have that insurance for kids when they are transported.
Okay, so please go on with the next page and the assumptions for working capital, I think.
Yeah. We have two last assumptions on the working capital and weighted average cost of capital. About the working capital, we because we launched that service and we not need cash and inventories. We just have a receivable because we allow parents to have to pay late for 1 month. They have to pay for bus ticket monthly at the end of each month.
Okay.
And about the payable, we also pay monthly for driver salary. And based on that assumption, and no late payment for gas.
Okay.
And yeah, and about the payable, we just have 5% account for 5% of total cost of goods sold. And for receivable, we have 8 account for 8% of sale.
Okay.
For the opportunity cost of capital, we use the weighted average cost of capital from the business consultant, and they advise us to use the WACC at WACC of 8.11% to evaluate the project, and they based on the CAPM model to calculate the WACC, and here's some assumptions they provide us to calculate them.
Okay, and so why do you have you assume that you have 70% equity and 30% debt? Why do you choose that?
That's based on the most common financial structures for the school in Vietnam today, and I just based on the common practice, as I guess from the market.
Okay.
Yeah. And from those assumptions, we have the table that summarize or raw assumption about the whole thing I just mentioned to all of you. And from raw assumption, we calculate to the key assumption. Thus, we directly use to calculate our cash flow and NPV. And now we will introduce Mr. Thong to present before after me.
Okay.
Hi, Professor and classmate. So, following to the assumption presented by Tung Anh, we would like to introduce you to two basic rules that we rely on to make the investment decision in our project. So in particularly in this project, we based on the NPV rule and the IRR rule. So let me show you. So as shown on the screen before you, we have here in this step, we calculate the incremental earnings. So according to the assumption that's just mentioned in assumption 3, I guess. So based on the survey, the bus service will increase the number of students who use the bus service. As such, as you can see here, the share with the externality will be higher than the share excluding the externality, and the cost of goods sold is no, the sum of the gross profit will be equal to the sale including the externality and the cost of goods sold. So in this screen, you can see that we have the a significant point that I would like to focus on this slide is the I mean that the last the cost in the year 4 at the earning before interest and tax. As you can see that there is by the bus will be used until year 3, but there's still cut in the year 4. This is explained by the fact that the lifespan of the assets is longer than the lifespan of the investment project. So until the sale of the asset in the year 4, the depreciation of the asset value is still result in the cost in the year 4 incurred by the school. So which is together with the fact that the school have no use of the bus service, and meaning that we have no revenue from the bus service in year 4, we have a tax credit in year 4. So that's it. Based on
sorry,
that. Yes.
Yeah. So I don't understand why you do that. Why do you why do you consider that there is no activity in year 4?
I mean, we use the bus in 3 years after the investment in year 1, and by end of year 3, we don't have any utilization from the bus. But
okay, so why don't you sell the bus at the end of year 3 instead of at the end? Because if you depreciate the bus for 1 year in year 4, so it's like you consider you sell the bus at the end of year 4. So my question is, why don't you consider you sell the bus at the end of year 3? You could have done that.
Yeah, I know. I mean that we maybe need the some standby bus in just in case that the demand of the student increase, and we still have some vehicle left in the garage that we can utilize, or we will need some time to find a potential buyer to buy the whole lot of old bus before we invest in the new buses. So okay. That's why, yep. So that's why we have a 1 year with no use of our vehicle.
Okay.
Yep. So based on the calculation here, we basically follow the formula. So we calculate the earning before interest and tax, and then as the with the tax rate of 20%, applying the tax rate of 20%, we have the unlevered net income of each year here. This is the basis that we calculate the Tuan, can you please move on to the next slide?
Yeah, just one question again. Can you remind me what are the other externalities? 30,000. What is it already? Sorry, because it's revenue, right? What is it? Other externality? Sorry.
Yeah, that's based on our assumption. Based on our assumptions at state here. When we launch the bus services, the number of preschool is expected to increase by 3%. But without the bus service, they just is expected to increase by 2%.
Okay.
And the incremental number of preschooler, that means other externalities that we add on the calculation.
Okay.
Yeah.
Okay, so allow me to follow on my presentation. So after we have the unlevered net income in the previous step, what we done here is to calculate the free cash flow of the project. So we add back the depreciation of the bus team, and then we minus the capital expenditure we spend on the in the investment in the year 0, and then we should have some slide to show you the increase in the net working capital, but you can see it in the detail in the Excel file. So we minus the increase in the net working capital, and we add back the after-tax cash flow from the asset sale. Let me explain a little bit on this item. So as you can see here, we have the sale of the bus team in year 4, and then the after-tax cash flow from the asset sale will be calculated based on the difference between the sale price of the assets and the product of the tax rate and the capital gain. So basically, we have another item to be add back to calculate the come up with the free cash flow. And yeah, so when we have the please move on to the next slide. So
do you have any sorry, do you have any detail for the after-tax selling price of the asset? Because can you show the Excel maybe? I don't know. Because because you say after-tax cash flow from asset sales is 53. So you said before that salvage value is 100. So it means that the capital gain tax is 47, if I understand well. But if I calculate in my mind, you don't have a gain, but you have a loss for the. So I would like to see the detailed calculation of the after-tax cash flow from asset sale.
Yeah, let me show you on the screen here. We have the sale price I-32 sale price here.
I don't see. I see the PowerPoint, right? I don't know if you're trying to show me the. Yeah. Sorry, for the moment you don't share the Excel. So stop sharing the PowerPoint and share the Excel. Yeah.
I see.
Sorry, it's not easy. I'm asking you a lot of things. Yeah, we can see it. Okay. So, okay.
We have here the salvage value of buses. And we have that's the investment at year 0. And that's always.
Because if we have
I think there's a problem here.
Yeah. Okay, so we find it. Okay, so no problem.
Yeah.
So because if you have like quickly 1 million, if you make it 13%, so it's like okay, it's 52%, 52%, so it's half. It's around 500. And if you sell 100, you should not have tax gain. You should have something negative, so maybe you should have something 100,000 at least, or maybe with the tax gain something more. Yeah. So okay, so don't worry. Please come back to the PowerPoint presentation and move on with your calculation to show me the rest of your NPV calculation. So please come back on the okay.
Okay. Thank you, and let me. Okay, so the the next step is basically quite basic. We just follow the mechanically the formula that to like as mentioned in the assumption relating the opportunity cost of capital, we have an average a weighted average cost of capital of 8.1%. So at that value, we have a discount factor equal to 1 divided by 1 plus the cost of capital exponent, the number of the years. And so as you can see here in line number 3 in the NPV calculation, this is the discounted discount factor of each year. And beyond that discount factor, we have the present value of the free cash flow in each year. And the NPV is the sum up on the present value from year 1 until year 4 and plus the present value of the free cash flow. And like we have the NPV is a positive number. The conclusion can be made here is that the project is feasible to be executed. And given the NPV equal to 0, we can calculate the IRR of 60%. So given that the IRR of 60% is higher than the weighted average cost of capital of 8.1%, the second conclusion to be made here is that the project is feasible to be executed. So at the end of this step, we based on the NPV rule and the IRR rule, we think that the criteria should be positive for us to proceed with the investment project. And my colleagues will present the conclusion that our school will be made here and the other factor to be considered in making such investment decision. Thank you for.
Okay, so because we already saw that we have positive NPV and the internal rate of return is higher than our cost of capital. So obviously we will go for this project. However, we can have some sensitivity analysis to better risk management for this project over the next 3 years. So as you can see on the tornado charge analysis, the two most sensitive factors is the number of preschooler over the next 3 years and the change in the bus investment. So if we can negotiate for a lower price for the bus and if we can better manage the number of preschooler over the next 3 years, we can monitor how well this project go over its life cycle. So conclusion, we still go for this project because we have positive NPV and the IRR is higher than WACC. Can you move to the next slide, please? So our investment decision is to approve for this project. And in the end, we also include several links and sort for your reference, so you can have further investigation into like several current business situation in Vietnam regarding the number of preschooler per year and the average salary in Vietnam. So thank you for listening. So I think this is the end of presentation of Group 1. So in case you have any further question, we are here to respond.
Thank you very much. Any question from the other groups in the chat?
It is me, Professor.
Yeah.
We just checked and we had some a mistake on the calculation of salvage value because we will check and correct it and send you later.
Okay, thank you very much for your honesty. Yeah, I could feel that there was a mistake from the beginning because it was not clear how it was calculated. So so globally, yes, there are some mistakes in the calculation. I can feel sometimes that you're still struggling with the calculation. However, on the positive side, I can see that firstly the project is interesting. It's original. It's a good idea. It's a good idea because in this type of group work, sometimes it's better to take something that people can imagine easily. And so this is what you did with this bus project. We can imagine the bus physically, we can see the bus, we can see the garage, we can see the kids in the bus. And so when we think about how many kids, how many seats and everything. So I think it's easy to imagine, to figure out, and for you it's maybe also easier to imagine what could be the cost and the revenues of such a project. So for that part it was quite interesting, and also for the cost, you think about the wage of the driver and so on, like, it's at least it's quite realistic for the assumptions. So in terms of the idea is good. You think about what is your project is implying. Maybe sometimes we get some some things about the calculations which are maybe a little bit let's say fragile, but at least you tried. It's like for the cost of capital, you try to find the cost of capital out of the peers, and you try to use a formula which is correct. The question about the capital structure is important, because normally 70%, 30%, it represents the capital structure of your company. So it's good to take the peers, but it's also, you have to adapt that to your company. But you made some assumptions, but sunk cost, cannibalization, salvage value, even if there is a mistake, and at least you've been trying. So I think you did what I did in the course, so I cannot blame you for that, but the fact that you consider to have 1 year of depreciation. But we could have imagined that, yeah, you can sell it directly. I understand you say, okay, maybe it's going to take some time to find someone to buy the bus. So I accept this. So globally, okay, so maybe some fragilities in the calculation sometimes, but good idea, good presentation. You've been trying to show cannibalization, sunk cost, a good sensitivity analysis, WACC calculation, details of your calculation. So at least I think you understood the concept, and so for me that's it. So thank you for your presentation, Group 1.
Yeah, thank you, Professor.
Thank you very much.
Thank you, Professor.
So thank you very much, Group 1. Maybe we can move to the group number 2, because I see that there was no question in the chat. Yesterday, people were joking after each project. They say, I want to invest in your project. I want to invest in your project. Maybe people in the Ho Chi Minh City, they don't want to invest without having maybe more information. And so it's only about joking anyway. So, okay, so we're moving to the number 2 project. So please, number 1, cut your mics and videos, and please, Group 2, if you can open the mics and videos. And so this is about Air X mask. So I'll let you the lead from now. So we're listening to you.
Thank you, Professor. Hello, everyone. My name is Hiền. I'm from Group 2. Our group today will come with the project AirX Max. The original idea of this project is based on what we are doing today. After the COVID, every time when I walk out to the door, I need to wear a mask myself. So we think about how we can make money from that opportunity. Our team have 6 members. Myself is the project manager, Mr. Nhật as strategy manager, Ms. Dung as marketing manager, Mr. Phương Anh as sales manager, Ms. Hồng as finance manager, and Ms. Nguyễn Thị Thanh Huyền as the operational manager. By working together, we come up with the agenda today in 5 parts. The first, we want to talk about our company. The second is our product. The third, we will talk about our market and our strategy. The fourth is our financial plan. And the fifth will be some sensitivity analysis we have done for this project. On the first part, to introduce about our company, please let me share my my partner, Mr. Nhật. will help us to take this part. Over to you, Nhật.
Yeah, thank you, Him. And I'm really glad to represent our group for the introduction about our group, introduction about our company. So our company is named Vina Government. We are the leading manufacturers in Vietnamese government industry, and our company specializes in producing clothes and uniform for both local and overseas companies. The production sectors including uniform, t-shirt, shirt, and exported garment products, also jacket, shoes, and skirt. After a long term of 2 decades in the market, our company have more than 20 reliable and trustable partners with long-term cooperation. And we are the leading company in the garment industry, so we identify our responsibilities and commitment with the society. Specifically, we have annually reinvestment amount of 1 million USD for research and development purpose. And we have more than 20 eco-friendly projects implemented. And AS Coffee Mask is one of them. Yeah. We can move to the next slide. And next, I would like to introduce about our product. And we identified that the problem occurred during the COVID-19 pandemic. It was met on some certain market problems. According to the statistic, during COVID-19 in mainland China, there was more than 100 million tons of masks consumed every single day. And during the impact of COVID-19, the disposal of face masks and medical waste during the COVID-19 is increasing the pressure to the environment. The traditional mask is somehow observed as the harmful to the environment. Besides that, the textile fabric decomposition has slowed to almost zero, so we could use it for about only 2 or 3 days. And additionally, the normal common cloth mask it got the deodorized feature but high humidity. So our product solve the solution for the market that we have environmental friendly by recycled coffee rounds. We're using 100% of natural materials, which are coffee rounds that could be recycled. Have the composition with more than up to 6 months of day of use. And we have the product, it has a high level of durability due to it, and it does not have the fabric shrimp. The coffee, additionally, the coffee rounds, it could also absorb and eliminate odors. And here is a symbol of the product, easy size. The coffee component of the mask comes into 2 forms. Firstly is the coffee yarn using the power knit technology. It comprises the mask itself as well as the biodegradable air filter inserted. And besides that, it also made with silver nanotechnology and coffee and meant to be withstand up to 60 days of use. This is the world's first ever coffee mask produced. And next, I would like to move to the SWOT analysis. As mentioned above, we have the strengths. Our strength is easily to be identified that we are the environmental friendly, that it could be easily to build community affiliate and to deliver the message to the community. This one is could somehow affect to the whole society. And secondly, we have higher level of durability compared to the traditional mask and medical mask. And thirdly, the time of decomposition is up to 6 months. And during this time of COVID-19 affected, this product is on-demand product due to the seriousness of Vietnamese air pollution and also the COVID effect. Therefore, there are some certain opportunities for this project that is concerned. First, we are the first mover and we are the trendsetter in the market, as there is also only traditional mask and medical mask available in the market. So this is we're the first mover. And secondly, this product is related to our core business, and this product line could be diversified and expand our corporation specific ecosystem, and also support to another kinds of category business. And thirdly, the market of using is this is somehow the healthcare industry, and there was a huge amount of market size. that we mentioned after this slide. And additionally, COVID-19 virus, it also changed the perception and the behavior of citizens, that they will be more care about their health and the living standard. So wearing mask is now the necessary behavior of the Vietnamese citizens. And finally, the opportunity that we producing this product, it could to improve our reputation and brand positioning in the society and for the government. However, because product is quite new to the market, so there are also some weakness and challenges. The first weakness is we are new to the market, so we have to educate and change the consumer behavior by R&D, research and development investment, and also education for the market, like some applied event and exhibitions. And secondly, because in medical field, we also have to acquire the regulatory and license requirements by the Vietnamese government. Additionally, this product is has a high level of durability compared to traditional one, so it will be more expensive than medical mask. And the level of entry is also higher, so we must invest more to our consultant and also our senior, and therefore we have challenges like this also, like this product like could somehow cannibalism with another fabric face mask and could be easily to copycat from the competitors. And next, I would like to move to the next slide to look about the market. Based on the graph indicated, here's the market trends. It shows the interest in sustainable product is growing over time during 2011 to 2018. It is seen that the percentage is increased steadily. And for the apparel market value, the graph in the left, it illustrates the production volume of the fabric on kites in Vietnam during 2010 to 2018. We could see that the million of square meters is increasing sustainable to the to reach at up to 1.9 million of square meters, and total export value of textile is also increased in the same period to up to 36 billion US dollars. So there's a huge market size as mentioned already. And next, I would like to indicate the market role and market share. We could see that the forecasted apparel market value in Vietnam to until 2022, it is about 3 billion US dollars. With the market share divided by clothing, it still contain the largest proportion of more than 50%, but medical is still remaining at 15%. So in order to enter to the market, we classify our customer into the middle class and upper class segmentation, because we believe that this segmentation, they also have awareness, well educated and aware about the importance of their health. So, and also this segmentation, they also have more loyalty than the Gen Z. So the target age group is about 20 to 45 years old, and with the average income of 15 to 50 million VND per month. In the first 3 years of the program, we only target on the domestic market, with the target location is 5 biggest cities in Vietnam: Ho Chi Minh City, Hanoi Capital, Da Nang City, Hải Phòng City, and Cần Thơ City. We go to the B2B channel like wholesale and retail. So for the wholesale channel, we focus on our maintain our customer that for the customer of our company for 20 years of partnership. So they are large scale branded company with including international university or school in Vietnam that we provide them the uniforms. And for the retail niche market, at the first 3 years of the product, we will try to explore the tree community who are caffeine addicted community that love the smell and love the product made by coffee ground, and the environmental friendly that they want to save environment by some recycled product that it could be more decomposition product time, and the healthcare community. by delivering the message and also the content strategy. Next, Ms. Hiền will represent our team for the strategy and financial projection plan.
Thank you.
Thank you, Nhật. By the assumption and the analysis what Mr. Nhật have been shared to you just now, we will come up with our strategy. Firstly, I would like to remind you that our customer would come from two groups. One is the wholesale and one is the retail. However, to make it more realistic, we will be really conservative by calculate our sales target on the wholesale customer only, because they are all our partner, loyalty partner, and we already provide the uniform to those company. So we believe that we can easily sign the new contract with them. We have looked into our portfolio and pick up 10 large scale company in Ho Chi Minh, Hanoi, and Da Nang, which have brand identity and which they already have the uniform provided contract with us. There are 6 banking customer, 1 retail real estate, 2 retailer, and 1 F&B company. With total number of staff is nearly 140 staff in Ho Chi Minh, Hanoi, and Da Nang. We assume that in the first year we can provide the marks to the new marks to 25% of staff quantity. The number will be rise to 40% in the second year and 65% in third years. The second part of our wholesale market is the high school and international university in Ho Chi Minh, Hanoi, Da Nang. We already have contract to provide the uniform to 4 university, which are in International University, Lotus University, Hồng Bàng University, and HUTEC. Based on the total number of fresh students per year, we come up with the total number of clients who can provide the marks. With the assumption, our client per year rose from 37,000 in the first year to 98,000 in the third year. So our growth rate would be 60% per year. And additional than that, we solve our product by 3-piece process in order to allow our client to wash the mask after they wear during the day. Then they can have alternative masks to use in the next day. So except of purchase, the client can use for up to 6 to 8 months. So total marks for the first year will be more than 100,000 marks, and for the third year will be nearly 300,000 marks. The next, we will come with our cost structure assumption. The first element of cost structure is the cost of goods sold. Our cost of goods sold come from 2 elements. The first is the production, the labor per cost unit, and the second is the material and packaging. We assume that in the first year we will have 20 staff, 20 employee with a monthly average salary is 15 million. In the next year, the number of employee will be raised to 30 and 40 employee because our sale volume will be raised. And the monthly average also increase with the growth rate is 4% is equal to the to the inflation rate. Our assumption of inflation rate is 4%. So about the material cost per unit is constant with the 5,000 dong per mask during 3 years because we already signed the contract with the supplier, so they can provide us the material with the constant price over 3 years, and we will review the contract with them after 3 years. The second part of cost structure is the sale and marketing cost. Our sales team will initial with 1 sales manager and 3 sales executive in the first year. Over the next 2 years, we will hire 1 more sales executive per year, and their salary will raise about 20% per year. Why the raise is very high? Because our sales staff is doing very good. They sell too much masks, so we need a bonus to them. About the marketing costs, our marketing costs come with 3 elements. The first is the ad campaign in media. The second is we saw renting a display area as coffee shop, and the 3 is the KOL expense. We believe that in the first year, because we focus on the wholesale client who our loyalty customer. So if we invest in the KOL too soon, it will not efficient. So we will start invest in the KOL expense in the second years. Finally, the admin and support cost, the administration cost will be 60%. 600 million per year, which means about 50 million per month. The transportation cost, and it will be constant over 3 years. How about however, about the transportation cost, because the volume of sale will increase, so the transportation cost should be raised consecutively. In conclusion, our total operational cost in year 1 should be 2,800,000,000, and raised to year 3 should be more than 5 billion. With all the assumption, we come with the financial projection plan. You can see we have assumption on the unit. So the sale and the sale price. The sale price of the first year will be 100,000 dong at the wholesale market. In second and third year, when we will reduce the sale price to achieve more retail client. Our assumption on carbonalism is that our company is currently provide another product called fabric mask. The durable of fabric mask is shorter than the AX mask. It just can be used within 1 month. So that's why one purchase of AX will equal with 2 purchase of fabric masks. So that you can see the number of units. So will be the unit sold of AX mask multiplied with 25% and multiplied to 2. The sale price of the normal mask is 35,000 dong, and the cost of wood is 18,000 dong. We also have
sorry. Yes, just one question
yeah.
For the cost of goods sold 37, 32. So you find it by dividing the, you take the total you just showed in the previous slide and you divide by the number of units, right? This is what you do.
This is what we do.
Sorry.
Sorry.
So
1 minute. Sorry.
Yeah.
You can see in this slide the total
previous
cost
one,
unit is 27.
Previous slide.
Yes.
Yes. So okay. So okay. So the percentage you calculate 37 percentage. This is a percentage of the total cost over the revenue. Okay. So that's okay. Okay.
Yes.
So please come back to your presentation.
It's just the percentage of production cost, and the percentage of production cost from 30 to 40% is very reasonable, as we have checked with other product line in our company. Okay, continue to the last part. We will spend about 4 billion into the R&D because it's a new high-tech product.
Okay.
The marketing support have already calculated in the previous slide. The loss rent we calculate is that it is equal to 100 million per month. So it's 1.2 billion per year, and it will raise 4% per year, same as our assumption of.
What is the loss trend in your context? Why?
Our loss rent is actually is equal to the factory renting fee.
Mm-hmm.
Yes.
That we,
okay. Yeah.
Okay. Okay.
Yeah, and it will raise 4% per year. Is equal to the inflation rate assumption. The factory equipment, we need to buy some new sewing and sewing machine. So we will need to invest 1 million here. We will depreciate them in 5 years, so each year is 20%. The marginal corporate tax rate is 25% in Vietnam. The working capital, we come with the inventory assumption of 20% because normally we have analyzed the inventory turnover of garment product. It's up to 80 days and equal to 25%, 22% here. Given our product is have higher demand, so we make assumption of 20%. The receivable and payable percentage is raised is also taking from other product line in our company. It will range from 15 to 20%.
So it means that so the customer will pay around 55 days, right? 55
yes.
days for the customers. Okay. Do you think it can be different from one client to the other?
It's up to our contract with client, but normally when we sign the contract to them, normally in Vietnam practice, the client is supposed to pay back within 45 to 15 days.
Okay, thank you.
Yep. With those assumption, we can calculate the EBIT and the unlevered income here. You can see we have the positive income since the year one because marks now is very high on demand product, so we can make money very soon. With the cash flow calculation, we make assumption that in end of year 3, maybe the situation of COVID might change. It will be more release. So maybe the sorry, someone is talking.
Yeah,
in the back.
I don't know who is talking. I see. Okay, I think. Okay, I mute someone.
Yeah, thank you.
Should
so
be okay.
By end of year 3, maybe the situation has been changed, and also we have new competitor join the market, and the new technology can come out. So we make the worst assumption that by end of year 3 we will sell our equipment and close this product line. You can see on the right hand side is our calculation on the free cash flow. We in case we sell the machine, the book price is 600 million, and we sell it with the cumulative depreciation is 600 million. So the book price is 400 million, and we sell it with half of price when we purchase is 500 million. So the free CF is 475 million.
Mm-hmm. Just one thing to be confirmed, but because you say thousands of dollars in your document, but we are talking about millions of millions of dongs, right? Is that dongs
yes,
here?
Yes,
yeah,
yes,
okay.
it's a dong. Sorry.
No problem. Yeah. Thousands of dongs,
okay.
Right? Oh, yeah. Okay.
Yeah. Okay. With the cash flow, we have already calculated the NPV and the IRR is very promising. We are using the cost of capital is 16% per year based on.
Sorry. Can I interrupt and come back to the previous slide, please?
Yeah.
What are you doing after? So you sell the machine. So you should have
here
in the working capital so after the free cash flow from selling the machine is well done. I can see the calculation on the right, and the calculation is correct and everything. I think for the increase in working capital, you should have
the year four.
The year four with the recovery.
Sorry, I did not capture that in the slide, but in our Excel is already have that number.
Okay.
Let me show.
Okay.
Okay.
But we should see it in the NPV calculation maybe on the next slide, because you should have a year 4 in your NPV calculation maybe. No, you have 3. Okay.
Sorry. Okay. Let me see the Excel. Let me show the Excel.
Okay.
Sorry, 1 minute.
Yeah. It's not easy to switch from Excel to. So you should already stop sharing your PDF, so your PowerPoint and.
Yeah. Because I'm opening too many tabs here, so.
Don't worry. Take your time. Take your time. Yeah. Because for everyone, so yes, of course. So the presentation is very clear. And when you when you have when you're selling the machine, you should have. It means that the working capital is going down to 0. So this is what was missing in the PowerPoint. So what I'm asking is that did you consider the recovery of the working capital in year 4? So we can see it now. That's 3.8 million, right?
Yep.
Okay. So.
And the NPV is here. Okay.
So so in the NPV, you take into account also the. So we just missed one column in your PowerPoint.
Yep.
But not in the calculation. Okay, so you can come back to maybe to the PowerPoint. Thank you.
Yeah.
Yeah, it's tricky because the working capital is supposed to be recovered 1 year afterwards. Sometimes people think that the working capital should be recovered at the end of year 3, which is actually like for the previous group, they didn't know when to sell the bus. Is it year 4, year 3? It's a question that is interesting because it's not always easy to consider when is the moment you receive the cash flow, right? So sometimes people will say year 4, sometimes people will say year 3. And so, okay, so you have an NPV which is positive.
Yes, we have positive NPV and the IRR is 41%. Given the project cost of capital is 16%, we come up with the assumption of cost of capital based on the KPI model. We take the risk-free rate is 4%, is equal with the inflation assumption. The beta factor is 1.3 based on the analysis of our partner, our consultant partner, and the expected return is 13.21% with a benchmark of VN index. So cost of capital calculated is 15.97, would be round up to 16%.
Okay. So so the okay. No, please
so,
go on.
It's very promising project. However, we would like to take out the sensitivity analysis to see what can happen with the worst case scenario. After the sensitivity analysis, we can see that the only element which have the highest impact to the project is on the unit sold. The break-even of unit sold is nearly 100,000 marks in year 1. So if it drop below the 96,000 marks, we win lots of money. So we do the scenario analysis of analytic pricing strategy, it so that if we reduce the price, because in the previous slide you can see that the sale price is not really much impact on our revenue. So if we reduce the sale price to achieve more clients, to sell more masks, we can achieve the better NPV. So it's still very promising to proceed that project. Thank you for your listening, and we are ready for the Q&A.
Okay, thank you very much. So if your colleagues have some questions, they can ask in the chat. So for me, I've been asking questions globally during the presentation. At the end, we can see that the NPV and the IR is a little bit high. So I think certainly we would have, if we have more time for this project, to go back to the calculation to see maybe if we were maybe too optimistic about the cost or the quantity or whatever. But this is also what the sensitivity analysis is doing. Okay. So yeah, thank you very much for your project. I think it's a very good project and very developed. We have a lot of positive things. Firstly, I can feel that you practiced your presentation, because it's well organized between you and your colleague about the rhythm of the slides, and everybody knows when to talk and everything. Even if you are only 2 people talking from the group, we have a very detailed strategy, so it's really thought of. The idea was good, right? I said to you already that I prepared also for financial control individual assignment. It's also about face masks, but maybe it's the assumptions are very different, so it's no problem. But I think it was a good idea in this context of COVID to think about this mask. So the strategy is clearly presented. I liked also the fact that you detail very well how you've been calculating the quantity of products. The costs are very well detailed as well. Usually, sometimes people can only take a percentage of the sales. Here, you didn't do that. You explained what would be the salary of the people, so you well understood what was expected. Maybe you also listened to the presentation yesterday, but this is something which is important for me, that people detail very well the cost, because when you go only with percentage of the sales, sometimes you can be misleaded. So it's not what you did. You did a very detailed presentation of the cost. Then only you considered that you calculated the percentage it represents, 37, so because it's a variable cost, but you understand also that administrative costs are fixed. So I think you master what you do. So it's clear for the selling price. It's well detailed. Maybe the loss trend assumption is a little bit theoretical, but this is the only one I have something to say about. For the rest, you've been trying to explain everything. Cannibalization, the working capital also, it's quite well understood with the number of days, and you're able to answer when I ask the question that it's linked to the average number of days in Vietnam. So we can feel that you will master what you do. Okay. So the project is well mastered on the whole, well presented. So congratulations for this. Maybe a little bit optimistic for the NPV IRR, but it's not so easy to reach some NPV IRR in such a short amount of time, right? I know that you don't have a lot of time to prepare the project, so it's already very good that you've been able to build a story which is very clear and well mastered. So this is my opinion about the project. I think it's a very good presentation. So thank you very much.
Thank you, Professor. Actually, Mr. Nhật is selling that product to other investor for the money. So if in case you're interested and want to invest, he will offer you for some equity.
Okay. Okay, I will think about it. I need to see the contract. Right? But yeah, I will think about it. So thank you very much, Group 2. So now it's time to move on for group number 3. So we are kind of on time because group 2 was from 8:39 to 9:15, so it took 35 minutes. And like yesterday, unfortunately, group 4 get prepared that maybe we will finish a little bit later. So I hope your colleagues can stay and listen to you. We finished at 10:10 yesterday, so maybe it's going to be like 10:10, 10:15 today. I'm sorry about that. It's not because I don't want to interrupt people. So I want people to have time to present their project. So I hope you can understand. And I'm sure that if we begin 15 minutes earlier, we're still gonna finish late because this is life. We know we always have things we need time to present. So please, group number 3, we are listening to you and looking forward to hear what you have to say. We cannot hear you. It's mute. Okay, so
hello, Professor.
maybe there are two. You must have maybe. You should mute the other one.
Hello, Professor.
Yes.
Oh, I think the sound is having some problems.
I'm gonna mute and try again. Maybe try with another computer, another person.
Hello, I test around with many machines already.
Nam Phương ơi.
Dạ anh ơi.
Em dùng headset đi cho nó đỡ.
Bị gì vậy ta? Hello.
Yes.
Okay, it's working. Okay.
Okay. Yeah. Good.
Sorry, you guys. Thank you so much for your patience. Today I am with our group. Our group is together for the session today. I am Phương and I would like to represent our ladies, our team, to share with you on our project. May I share our screen?
Yes.
Okay, can you guys see my screen?
Yes.
Yes. Today I'm gonna represent my team to share with you on our capital budgeting project. We are group number 3. Today we will talk about our M-Food group. Some information will be discussed on our company in session 1. On the second part, I will walk with you guys through the market analysis on why we think that this project is a potential and how prep are we and how suitable are we for this project. On the third part, there will be project information on the details of our assumptions and our analysis on whether this project is potential and the conclusion of our project. Last but not least, I also include the appendix and the reference list of all the references I use in our research. I would like to introduce our team members. Me, I am Phương. I have Miss Jami with me, Miss Jaman, Miss Thủy Dung, and Miss Thủy Dung too.
Wow, only Mrs.
Yes, this is the lady team.
Lady team. Go ladies.
Yes, go ladies. First of all, I would like to say that all of our financial statements are realistic, which is our data are real. So we have to change the name of our company due to some confidential information requirements. So our company is founded in 2000, and we are the first domestic corporations to adopt the growth strategy and taps in the foreign market. Our main industries include invest in the FMCG products and distribute them domestically. I show with you guys some of our products, including fish sauce, soy sauce, and chili sauce. Observing the rise of the demand of the fish sauce are driving in the global fish sauce market. So we think that we are going to launch the premium fish sauce product to the US market. So next step, I will show with you how potential is this market, this industry, and how we are suitable for this project. First of all, to understand how to manufacture the fish sauce, I will include the steps on how to manufacture. First are the raw ingredients. The raw ingredients are the key of our products. Our anchovies, our artisans will go directly to the beach and to gather the anchovies and the heavy size sauce due to the requirements to keep the sourness and the bitterness of the products. Next, we will go through the rinsing system. These rinsing systems where the bottles are put on the conveyor, and they will go to the cleansing and sterilization to make sure that the bottles are completely removed from any dirt and chemicals and bacteria. Next are the filling system. This filling system is very special and are well known by our brand because these filling systems are very close. All of the bottles are filled on the conveyor, and the mechanical system will arrange the clamp bottles with the products where during to the extractions methods, our machine can go through many extraction methods like isotropic and isometric and quantitative extractions. Lastly are the labeling process and inspection packaging. This is very important so that the products are okay to go to the market. There will be a series of sensors. Our products are not qualified by man-made, but are through the sensors. The sensors will qualify whether the products are full rating, the button are fully closed, and also the labeling are satisfactory label in the right positions. So after all of the inspections, the classification structure will be made so that the product can go out to the market. To go through the global market, why we think that this is suitable for our products is that the global fish sauce market size is $15,032,000 US. Different cuisines are the key factor responsible for our market growth. Manufacturers are using natural fermentation process by using anchovies and sea salt to retain the nutritional value of the final products, developing attractive and packaging solutions. Currently, the North America is expected to be the dominant regional market over the forecast period, and the market in Central South America is projected to register the fastest compounded annual growth rate from 2019 to 2025. Analyzing our global market, the increasing demand for convenience has led to the availability of the fish sauce in the supermarkets and hypermarkets, which is why you can see the compound annual growth rate from 2020 to 25 is 3.2%. Some of our competitors are Squid Brand, Unilever, and Red Boat. They are all very high consume and very common famous brands, which is sold in Whole Foods and Amazon to the US and Europe markets. The reason why we are thinking that in nutritionally there are more opportunities for fish sauce to grow is because the micronutrients from the fish sauce is very important to health. If micronutrient deficiencies happen, then it is a threat to both pregnant women and small children, which will prevent the cognitive growth and the development of the fully growth body. For adults, if you are in lack of micronutrient deficiencies, you will suffer from the reduced work productivity. That is why many restaurants and fast foods and home deliveries, cafes and pubs, they are trying to use the qualified and good ingredients so that their customers are also for marketing strategies. They will promote the data that they are using very good and well qualified products ingredients. To understand more about our opportunities, I include the SWOT analysis so that we can see how potential is this project. First is our company, the M Food Group, is recognized as the highest growth rate company in Vietnam, and we have accounted for 70% of fish sauce market share in Vietnam already. We also adopt the competitive strategies through our R&D programs while aiming to develop new flavor sauces. And Food is also heavily invested in product innovations and packaging to achieve the sustainable competitive advantage. Some of our weaknesses are due to the product's features. It takes quite a time to brew the natural fish sauce and also the sauce. Thus, the mass production can be somehow limited because normally fish sauce needed around 6 months to brew. Fish sauce is also a kind of sauce that is one of the many common sauces in US, so it is quite new. So the market entry is quite new for this product to come. Some of the opportunities for our products is that consumers in countries are more interested in paying for safety and quality. Therefore, there is a rise in the demand for this premium brand fish sauce. It is also driven by the look of food safety scandals in the recent past. Many scandals about food safety has been rising recently, so which is the premium sectors are very attractive right now. Also growing food service sectors and like restaurants, cafes, pubs, and street kiosk fast food, they will use this fortified fish sauce for their customary and personalized food offerings. In order to join the US market, also the Europe market, we have to participate in food exhibitions and increasing the population of our audience. One of our threats to enter to this market is that it's very moderate, which is not high. How moderate is it? Is that we have some competitive already on the market, and they have been long in this market, like Red Boat and Masan and Thai Fish Sauce Factory. For Red Boat, they have been a best seller in Amazon already, but their background is not very strong. They are not as big as us, so we think that it's very easy for us to get on track with them. And consumers might choose other brands due to the lower price, but it's not a problem. It's not a concern for us because our product is more premium with better quality. So it's not a problem. The easy availability of other substitute sauces, coupled with the time and cost involved in the preparation of fish sauce, is the major challenge faced by the fish sauce market. So this is like a very standard issue of all fish sauce companies. So it's okay. Yeah. So moving on, I will my teammates will introduce with you about our project, some of the analysis on our company. Welcome, Miss Jamie.
Yes. Here we can have the figure for the sales and cost of goods sold in the last 3 years of M Food Groups. As you can see from the figures in the slide, the average growth rate of the sales to 3 years is to the 3 recent years is 0.62%, while the cost of goods sold average growth rate is 4.51%. As a result, the gross profit is not increasing through the 3 years. The main reason for this is that we face the price competition from essential goods, and we have reached the limit of market share, so that it makes us difficult to increase sales. Moreover, the product is labor intensive and needs large space to make fish sauce, and we have to pay more on environmental protection tax on packaging. Yes. Here I will share you the opportunity of this project. How the new equipment will help us to support to improve the high quality with the same input. Therefore, we can increase our margin profit. As you can see from the table, from the same amount of the 2 main ingredients of the product,
is that 1,000 kilograms of fish and 100 to 100 of liter of water. The output for the normal products will be higher. The output for the premium one, however, the average price for the premium one is higher than the normal one. And the total sales from the same amount of material for the new premium product is higher than the normal one, so that the margin profit is increasing from 50% to more than 60%.
Just a question. So what you're presenting is for a new product, or is it like a new process for existing product?
We have a comparison between the normal product is the existing product, and then the new product we will invest in.
Okay.
Yeah. We can have here a closer look. We can have a comparison between the normal product and the new premium products here. We have to change the form of packaging from plastic to glass and paper label, so that the cost of packaging will increase, while the labor cost will decrease because we increase using automatic equipment, and the volume for the product will decrease, while the cost per unit and the price per unit will increase significantly, so that the gross profit will increase. Okay, now my teammate, Mr. Mang, will share more specific project assumption with you.
Hello, everyone. My name is Kaman. I would like to share with you about more information about the project with the assumptions that we ourselves will increase gradually for the next periods by 2%. And total project, we will invest that for 9 billion Vietnam dong, and this will be depreciation for 5 years. And we also account for 5.5% of the total revenue from this project. Also, marketing costs will be increased for 2%. Tax, not a big difference with no change from the normal product, is 20% the same. And the cost of goods, which is about 20% different with the normal product, is 11,000 Vietnam dong by bottle.
I remember that when we discussed the project, you were talking about exporting the product in the US, right? Is that still your idea?
Yes.
And so, do you have in your cost any costs which are linked to exportations or transportations or something like this?
It will be in the cost centers. Transportation because based on a FOB price. 30,000 is the FOB price.
Okay, but if you need to export your product to the US, maybe in the cost, should we have more transportation costs or stuff like that?
Yes, but Air Force had the 20 years for this business, and in the 20 years business we have a lot of distribution, and this is
It's just an additional products, but not we have already this model already.
But still, I understand what you mean. You mean that you got the transportation cost existing already, but still, I think Yeah, that could be a question. Should it be considered as an additional cost or not? Maybe to some extent, because even if you have already the network of distribution, maybe you will need more frequency of distribution or something like this. So maybe it could be considered. Okay, so please move on.
This is just this slide is just more specific what I have mentioned from last slide.
Okay.
That we will produce. This is our plan for we call that premium fish sauce. This is a new project, and with the normal project we consider fish sauce, and based on this one, this is our business plan for from next year for next 3 years with the sales and also cost of goods. Assume that even though we produce for export, but we also want to have some trial with the domestic market, because currently actually with this business plan we still can have another 15% due to the available of capacity of the machine. So we also get some trial with the domestic. So we assume that this will be 10% impact into the normal the silver fish sauce for domestic, the current, I mean that the existing product. This will be for sunk cost. Yeah, this will be calculated for sunk cost later.
Where is the sunk cost? Which one is it?
Oh no, sorry, I made a mistake, sir.
Cannibalization.
Okay, cannibalization. Okay, yeah. Okay.
So,
so what is a loss trend that you have?
Loss trend here, we assume that sunk cost here.
Not sunk cost, not sunk cost. Sorry, I missed it. It's not cannibalization. It is opportunity cost. Opportunity cost, you mean?
Yes.
So what is it in your context? Can you explain why you consider that in your context?
You mean this one, right?
The lost rent, yes. Lost rent, 360. Why do you consider, how you want to sell that to me in the context of your project? What is it practically in your project? Why you consider this cost? How you explain it?
Yes, we have a space, and the space is available.
Okay.
Yes, 1,050 and 500 meters. 1,500 square meters. Yes.
Okay.
But on this we don't have any building, and now we are renting this with the price either 360 million Vietnam đồng. Yeah. And therefore, if we want set up a building, and after after that invest a new equipment, we will set up a new building with the price. Yes.
Okay.
Yes.
Thank you.
Thank you.
This slide is just more specific how we spend the 1,500 here. To understand is cost will be for set up the relevant fees and for the advertisement. Help us to set up this project to be.
Okay.
So next slide, I would like to invite Ms. Dung to share with you for the earning table after decision.
Yes. I'm so sorry. On the screen, you can see the table 8.1. This is the only forecast, and before we calculate the sunk cost or the utilization cost, opportunity cost. Yes, and after that we will see the effect of the sunk cost and cannibalization to the earning. Yes, and this is on the table we can calculate that. The first 10% of the domestic sale affect by new projects. Therefore, we recalculate the sale based on the sale price and the cost of goods of the input, and after that I will negative to the 10%, and we have this. Yes, and the sunk cost we will calculate. After calculate, we will add in the selling, general, and administration, and after that we'll have the table after the sunk cost and cannibalization. Yes. As you talk with us, the loss rent is an opportunity cost, and I will.
Yeah, okay. It's opportunity cost and not sunk cost. I understand.
Okay, and after calculate, and we have the free cash flow, and the free cash flow, total free cash flow is the positive. Yes, and after me, Miss Young will show the sensitive analysis and our decision, yes or no, should we invest to this project?
Yeah, okay, let's move to the sensitive analysis. This is the result of the project. We have NPV is 2,000 billion, and internal rate of returns is 49%. So it's effective. And after many years in this sector, we think that the sale volume and sale price are the key assumptions that affect to our business. If sale volume under 73,000 bottle, our project is negative, and if sale volume higher 73,000 bottle, our business will positive. And in addition, if both sale volume and sale price go down, sale volume and sale price go down, our project is positive, is negative when sale volume less than 990,000 bottle, and sale price less than 20,000 dong. So we can see our project is positive, and finally we invest in food projects. Thank you for your listening. If you have any question, we're here for any question, any concern.
Thank you very much. I have only one question, and then we can move to the last group. Can you come back to the main assumptions when you have, you know, the key assumptions when you talk about working capital also? Yeah. So for the working capital, yes, I would like to discuss working capital.
Yeah. Okay.
Yes. So how did you, because you say that your product fish sauce, it needs maybe 6 months to get ready, right? Because it needs to fermentization or something like this, right? It takes time to get ready the product, right? So how did you calculate the level of inventories? Because it seems to be not so big. So did you consider in your inventories the fact that your products must stay 6 months before you sell it?
In the production line in the production processing have the one step in the rising, and the rising we need to 6 months because all of this either nói về cái thủ công là
manual. It's a kind of manual processing early at the stage.
But my question is, should we have more level of inventories?
Sorry, can you repeat again?
Yes. My question is, should we have a high level of inventory? Because inventory, your products will take 6 months to get ready, right? So should we have more inventory? How did you calculate inventory?
This is the industry product, and the rising is outsourcing.
Okay.
The first outsourcing, and at the next time we want to automatic equipment can calculate the protein in the fish sauce. Therefore, we invest this project. And if we invest the project, we can calculate exactly the how percent in protein in the fish sauce, and the day, how many days can for the one order of the fish sauce order, and the inventory days of the exciting either 45 days, and even we have the new equipment and this project, we can reduce it to the 30 or 35 days inventory.
Okay.
Days.
Okay.
Some outsourcing process, so we can reduce the number of inventory.
Yes.
Okay, I understand now. Okay, so thank you very much. So some good things. Sometimes we can see that not so easy for maybe some time for the calculation. It's maybe also a little bit fragile. The idea of the project is good, and you make the assumption. You built your calculations on existing product, which is good and bad. It's good because you have a good basis for calculation. It can be bad or dangerous because maybe you use only percentages. But globally, what you did, you still have been able to do all the process to calculate NPV, IRR. So you showed you understand capital budgeting. You have also a sensitivity analysis. And you also explain, even if you think about percentage for cost of goods, you say, okay, we're going to have more packaging, we're going to have less employees because automatization of the machine and so on. So you take into account that in your project. So this is it. So thank you very much for your presentation. And we don't have a question in the chat, so maybe we can move to group number 4.
Thank you for listening, guys. Thanks.
Thank you.
Thank you. Hi, Professor. Hi, Professor.
Thank you.
On
Yeah.
is not belong the purchase bộ phận là department. Yes, we don't have. This is the first time we purchase one new project, and all your guys help us to complete this project.
Yeah.
Yes.
So I can see that. You've been fighting hard to be able to build it. So as I say, at least you've been able to, you have everything which is done, all the phases, and you've been trying to follow what we studied together. So I think it was still a good presentation because you have all the steps, and so hopefully it's going to be helpful for you next time you have to do one. It's not going to be the first time, so you have more experience. So thank you again for your presentation.
I believe that our colleagues are smiling about our products, because even though we don't want to mention about the brand name and the companies, but everyone know who
Except me. Everyone but me knows the product. Yeah, you took a long time to hide the names and everything, but I'm sure that everyone knows.
Yeah, we are using the real data, so it's just in case for any legal concern. So if you want to laugh, just laugh, because we know that you know.
Okay, don't worry about that. It's not, I don't care about the product. I care about what you have to say to me about your learning process. This is what is important for me. Thank you very much.
Mentioned for you to be aware that we also have knowledge about legal, so that's what.
Okay. Don't worry about that. Okay, great. Okay, so just for the group 4, so get ready for the group 4. Please give me 1 second to I need 1 or 2 minutes and I come back.
Bị tiếp hả? Ok.
Okay, so I'm back. So sorry, group 4. We are ready to listening to your project. You can go, group 4. Can you hear me? Yes, we don't hear you. You don't have the sound.
Okay, hello, Professor. Can you hear me?
Yes.
Hello.
Yes.
Okay. Okay. Sorry, Professor. Okay. Today we would like to introduce to you the new Thai generation. It is called Radio Thai from Yokohama company. And our project has been built by 6 members. They are Trần Tuyên, Trần Dung, Trần Mai, Trần Khanh, Võ Giao, and Trần Trúc.
So yes, just to get, I think there is only there is one person missing today for the presentation, right? She cannot be here because she has a personal commitment. Can you confirm that she participated to the group work in a fair way?
Yes.
Okay. Thank you very much. You can go on.
Okay, my classmate Miss Dung will make an introduction to all of you about the project.
Hello. Yes. Hello, Professor. Hello, everyone.
So,
hello, Professor. Hello, everyone.
Yeah.
My name is Dung, and it's my pleasure to be the first part of group work.
Let's begin with our company, Yokohama Thai Vietnam Limited Company. We established in 2010, and our company specialized in Thai manufacturing for cars, light trucks, heavy trucks, and sport motorbike. We have 2 main markets. The first one is the original equipment manufacturer market. It consists of the large automobile companies like Taco that buy tires for new cars, and Yokohama occupies 11% on this market share. The second one is replacement market, RM. The replacement market consists of old tires purchased after the automobile has left the factory, and our company occupies 8% on market share. As we have researched, we are going to launch a new generation of tire, which is called radio tire. And you see in the picture, the construction of the radio tires is different from the others. And in comparison with the others, radio tires are more flexible, longer lasting, reduce heat better, and safer for high-speed ride. So why Yokohama choose to invest in a new line of products? We have a market research based on the database of Vietnam Automobile Manufacturer Associations. The data shows that there is a significant growth in car sales from 2007 to until now. And these are the following reasons for the growth. A stable macro environment support growth in car demand. The second reason is per capita income grow well, so Vietnamese people can afford to buy luxury assets like cars. And the automobiles market still have a lot of capacity. Forecast for Thai demand growth in Vietnam from 2012 to 2016, an average of 5% per year. So you can see in the chart the growth of car sales and the growing rates. So we see an opportunity to increase the car sales and so on the car components such as tire. So that's the reason why we decide to invest on a new generation tires. And for further information about our project, I would like to invite Ms. Mai to come up with the project assumption.
Thank you, Ms. Dung. Hello, Professor.
Wow.
Hello, everyone. My name is Mai. I would like to read more about other assumptions about this project. This new type would be put on the market beginning next year, and Yokohama expects it to stay on the market for 4 years. Yokohama must initially invest $120 million for production line to make this new product. This asset can be sold for $60 million at the end of year 4, and initial investment comes from owner equity. The expected required return on the equity is 12% per year. Therefore, the company used a 12% discount rate to evaluate new product decision. And annual inflation is expected to remain constant at 4.25%, and tax cost is 20%. Yokohama intends to sell the radio tie in two markets, the OEM and RM markets, which Ms. Jung, my teammate, mentioned above. And for the OEM market, consists primarily of the large automobile companies that buy tires for new cars. The radio tie is expected to sell for $36 per tire. Automobile industry expects automobile manufacturers to produce 2 million new cars in the first year, with growth at 1.5% per year. Each year, each new car needs 4 tires. Yokohama expects the radio tire to capture 12% of OEM market. And for other markets, RM market consists of all tire purchased after the automobiles has left the factory. So this market allows higher machines, and company expect to sell the radio tire for $59 per tire. Industrial analysts estimate that the replacement tire market size will be 14 million tires this year, and this will be grow at 2% annually. Yokohama expects the radio tire to capture an 8% market share. And the company intends to raise price at 2% above the inflation rate. Variable costs also increase at 2% above the inflation rate. The research and development costs so far have totaled about $10 million. The testing, marketing costing $5 million has shown that there is a significant market for radio type. In addition, the project will occur $25 million in marketing and general administration costs for the first year, and this cost will be expected to increase based on inflation rate in the subsequent years.
Okay,
And
so just I'm sorry, just for the variable cost before 18. So you say you based on cost of previous products, right, of your company. This is what you did. So how do you, yeah, okay, so the 18 represent what they have in the variable cost in previous models or something like this?
Actually, the variable cost we calculate based on the raw material, the production cost, and yes.
Okay.
Yes.
Okay. And so do you have any detailed calculation of this in your Excel file or?
Yes, and next my teammate Michuk will clear to you how we decide to invest this project via figure.
Okay, so I'll let you finish with the assumption. So you were talking about marketing costs. You say they will increase, right?
Yes.
Okay.
Yes, my teammate Michuk will clear to you how to decide this, decide to invest this project.
Okay.
structure.
Hi, Professor and everyone. My name is Trúc. Then Yokohama financial team will evaluate the radio type project and provide recommendations for CFO on whether to go ahead with this investment. Except for the initial investment that will occur immediately, assume all the cash flow will occur at the end of years. We are going to compute data to give the revenue and cost report. Firstly, we have assumption for this year that the OEM market, the size occupies 11% on market share, could sell 2 million new cars, grow at 2.5% yearly, and the price is $36 per time. Yeah. As you can see in the screen, yeah, the RM market, the size occupy 8% on market share, could sell 14 million tires. Growth rate is at 2% annually, with sale price is $59 per tire. So as you can see, we calculated it, and we have a sales of OEM market is 2 million multiply 4 tires per car. Okay. Then we have 8 million tires in year one. And the sale of
just excuse me if I miss something, but so you have two products, right? For the new tires and replacement tires, right? This is what you have, yeah? So
no, we mentioned before we have two market.
Yeah.
They are OEM and RM, but one product.
Mm-hmm. Okay.
Yeah, we continue. Yeah, and the sale of RM market is for 14 million tires in year one. Similarly, we calculate the revenues of year one to year four. Yeah. Secondly, we have variable cost per unit. Yeah, that's Miss Mai mentioned about $18 per unit, and it also increased at 2% above the inflation rate. We compute the variable cost following the annual sales. Yeah. And the research and development cost is about $10 million. Testing, marketing is some cost, so we didn't put in the calculation, in our calculation. Yeah, and we have $25 million in marketing and general administration cost for the first year.
Okay.
This cost is expected to increase at the inflation rate is the subsequent year.
Okay.
Then we have a marketing and administration cost in year one, and is $25 million. Then divided it 1 plus 4.25% exponent X years to capitalize in year 2 and year 4.
Okay.
Year 2 to year 4, yeah. And finally, we calculate the EBIT and earning after tax. The profits are positive through the years. Yeah. And then we continue to compute working capital, and the net working capital requirement will be
15% of sales per year from year 1 to year 3, and we accept
So why do you take 15% of the sales for the working capital? How do you reach this percentage?
Yeah. We will go back to the previous slide. That Miss Mai was mentioned. Miss Mai mentioned about.
Okay. So based on the industry. Okay.
Yeah.
Okay.
And the net working capital requirements will be 15% of sales per year from year 1 to year 3, and we accept to recover on the working capital in year 4.
Okay.
Yeah. So we conduct a research about the increase of industry and company history figures in previous years, giving the result of 50%. Yeah. Next, we continue going on the next report, that is free cash flow table. As we had mentioned before, we have an agreement with vendor about $60 million for book value at the end of year 4. So we discount to the present value.
Okay.
We add on information from revenue and cost report and discount to the present value too. As the result, we have a NBV is positive and IRR more than ROE. Then we decide to invest on this project. And
okay.
Now, yeah.
Can I just ask a question? So you present your calculation in a little bit different way than what I did. So maybe you have some previous experience from university about those calculations, because you calculate present value line by line, which is correct. No problem with me. Huh? I accept that 100%. Don't worry about that. I'm just have one question about, because you have the cash inflows, cash outflows. Okay. You say in the cash outflow depreciation cost, it's not a cash outflow because you don't pay it, but you add back the depreciation at the end of the calculation. So it seems correct. I have only one question. Yeah, please stay there. Yeah. Please stay there. Yeah. Yes. And so my question is, you have calculated taxes. Okay, so you have earning after tax, which is 34, I think, and tax is 21. What is the base of your calculation for the tax? Is it the net cash flow before tax, or is it how you calculate? Because of course we should not have the initial investment in the calculation. So what is the basis of calculation of tax?
The tax will be based on the Vietnamese tax regular.
Okay,
and
but what is the basis?
Income tax.
What is a profit before tax? What is a profit before tax? You base your calculation on the profit before tax, then you use a tax rate in Vietnam. So maybe you have it on the next slide. Maybe, I don't know.
Yeah.
Okay.
Professor,
okay.
Can you? Sorry, can you repeat your question again, please?
Okay, no, I can see now. I can see earning before interest, tax, and so okay. So you can move on. So I have my answer to the question. So you can move on.
Yeah. And now we are going to the last part of our project to see how the result, if some crucial indicators of this project are fluctuated. Let's have a further information from our teammate from Mittelstand. Thank you.
So now we will continue my presentation with the sensitivity analysis. So in our perspective, we will do the sensitivity analysis with for the variable which affects the cash flow and NBV of the future in the Yokohama, the tire, the company. So it means that in my perspective, if this variable that affects how the entity will be affected in the future. Firstly, we will start with the variable with the OEM market unit price. So we will do the sensitivity with the step of the dollar to the dollar for the unit price. I mean that at the firstly the price of the OEM market is 36 dollars. So we will run the scale of the unit price of the OEM market from the
Yes. Okay, it's back. Okay, so yeah. So I don't hear the person anymore. We lost the person, I guess. So what I understood is that the sensitivity analysis is based on the change in the market unit price parameter, right? So you have a sensitivity analysis, one variable, and so on. So I don't know if someone else in the group can or is it me that is there some? Can you hear me? Okay, so you can hear me. So it's more. Do we have someone from the group 4 that that can talk? I think their internet connection got trouble. Maybe they are all in the same room or something like this. So if there is an internet problem, it's the internet problem for everyone at the same time. Okay. Okay, so me, you can hear me and see me. So it's not coming from me. So it's coming from your colleagues from group 4. So I just received an email, I guess.
Hello, Professor.
Yes, yes, yes.
Because our teammate Mr. Khan has problem with her laptop,
Okay.
so I would like to share from my laptop. So
okay, yes, please. Yes. We are nearly finished because it's sensitivity analysis. So we are nearly finished. And even if the sound was not good, I understood with your slides that with the PowerPoint document that you were presenting a sensitivity analysis with a unit price variation, if I understand.
Yes, wait first, we are sharing the presentation from my laptop.
Okay.
My teammate has problem with her laptop. I'm sorry.
No problem. No problem.
Yeah.
Sorry for the delay.
Sorry. Yeah. Này không, cái này không. Này không. Can you see my screen?
Yes, I can see your. Yeah, I can see your screen. But for the moment, it's a white PowerPoint.
Maybe our room has problem with the internet.
Okay. So. Okay. What? Yeah. You have problem with internet in your room?
Yes, I think so.
Okay. So you know what? I'm gonna share your PowerPoint document.
Yes.
And so you just stay without the video. Okay. You just stay with the sound. Can you see it? The slide or?
Okay. Can you hear me?
Yes, I can hear you.
So I will start my presentation.
Okay.
So if I change the chị quay lại cái slide này đi. Cái này làm thị trường AM rồi. Này thầy share hả?
So you were talking about this slide, sensitivity analysis about, is that it, right?
I do the presentations with the previous slide with the OEM, the market share, and the unit price. This
Okay,
RM
so previous slide.
No. Next. Okay, this one.
Okay.
If I in the OEM, the market share, I will the change the scale of the market share of the this from the 11 the percentage. With the step of the 2%, we have the scale of the 7% to the 50 the percentage. As a result, we have the NBV that related to the market share, the change. And as we know that if the market share is is less than or equal to the 7 the percentage, the NBV will be the negative. Secondly, in the OEM, the market unit price, we also do similarly with the sensitivity analysis. So we have the scale from the 30 to the dollars to the $4. This is I have the NBV related to them. And the next slide, we have also the sensitivity one variable with the RM, the market share, and the market, the unit price. We also see that in the RM, the market shares, we have the NBV, will be the negative. If they the less than equal to the 6%. In this case of the RM, the market, the unit price, we see that the NBV will be the negative if the unit price is less than or equal to the $55. Okay. So similarly, we do the sensitivity analysis with the inflation. In the conversely with the market share and the unit price, we know that if the inflation tend to the increase in the future, the NBV and the IRR will be a decrease. However, when we move to the variable of the sensitivity analysis, we want to know that how the variable affect the NBV, the IRR of the cash flow. We will do the sensitivity with the variable, the OEM, the market share, and the unit price, and we know that we know that the NBV will be the negative if they less than the 30, if they less than or equal to 38, and market share the 7%. In the same way, we will do the sensitivity with the inflation and OEM, the market, the unit price. We have we see that the NBV will be the negative. However, they will the decrease when they decrease if the unit price and inflation the decrease.
Next slide. Sorry. Okay. So this one.
I think I will do the sensitivity analysis to variable and the market share and the market, the unit price also will be decreased if we have the 24 week the unit price is the 63 dollars, and the market share decrease is less than the 8% compared to the expected in the project. And also we have the inflation, the combination inflation and the market, the unit price, which be the effect the cash flow and the NPV if they the market the unit price only the remain with the rise of the $55 and the inflation will be the tend to the increase in the future reach to the 4.25%. However, we want to know that the combinations of the many of the variable affect to the NDV, the cash flow in the project of the company. We will do the scenario analysis. In this case, we assume that we will assume that we have the three the scenario, the most likely case, the worst case, and the best case. So in the worst case, we use the inflation, the market share, the OEM, the market, and the market share, and the unit price, and the market is the less than least in the two variable of in the sensitivity analysis of the variable, and the best case in the good way of in the best case we will use the chance of the unit price and inflation in the two variables. So we have the NBV and IRR in the worst case and the best case if they combinations with the two main data factor. So we in the conclusions we will be recognize that the NBV will be like to decrease when the variable is in the run scale, the worst case, and the most likely scale. And when will be the increase, it means that they will be the negative, positive when the variable are between the scale of the most likely case and the best case.
Okay. I think I'm not. Yeah, I think I'm not sure you can have a negative IRR actually, a negative NPV for the worst case you can have, but I'm not sure how you can calculate the negative IRR. Anyway, beside that, yes, it's a very detailed, thank you, sensitivity analysis with a lot of assumptions. So that's quite interesting. So thank you for your presentation. So yeah, you have something to say? No, or you want me to give some feedback? Okay, so yes, it's an interesting project. I can see that you have an original way to calculate the things. Again, maybe you've been studying that before in a different context, which is okay for me. I don't care at all. I think the choice of the product is a good one. Because we can really imagine the tires and everything and the two type of markets. Maybe what was a little bit dangerous for your project was to I hope that someone is hearing me, because I hear someone talking, so I hope the people from the group hear me. Can you confirm in the chat? Yeah, okay. So yes, what was dangerous with your project was just to rely only on the information from competition or your industry or whatever what you did, but it is compensated by the fact that we have a very clear and detailed presentation about the assumptions. You clearly explain everything. So I'm buying it. I'm buying it for the assumptions. Maybe the cost of capital based only on return on equity can be more detailed because if you take the return on equity, it means that you consider that your company does not have debt and has only equity, which is I think not the case. But the rate that you have, I think it's 12% or 15%, I don't remember. It makes sense. So for me, it's not a big problem. What is interesting in your project is that you have two products, right? So that makes certainly more calculation, more complicated to do. But I mean, the way the sensitivity analysis is also presented with the scenario, everything is quite detailed. So maybe if I go in the details of your calculation, I will see some things that I don't agree with. But globally, the way you present the project is quite convincing. I can feel that you are quite comfortable with calculations. Okay, so maybe you did some finance before, maybe you have some people with engineer background, I don't know. Okay, so the only thing is that sometimes it's too much relying on what is in the industry, but that's it. I noticed also a good recovery of the working capital in year 4. The cost, yeah, and that's it. So you presented PV, IRRs, and very detailed sensitivity analysis, and the calculations are quite detailed. The assumptions are quite detailed. So it's a solid work on the whole. Certainly, again, maybe when we go into the detail of the cost, maybe there's something to, I don't know. This is my feeling that it's less accounting approach and more finance or a mathematical approach in the project, but it works. So I think it's a good presentation as well. So you share with me a JPEG, right? So I'm gonna just try to stop sharing my screen and opening the JPEG. Okay, so we will finish with this image. I'm going to share that with everyone if you agree. Okay, so this is the members of the group 4. So they just wanted to say to everyone, don't worry, we have internet connection problems, but we are fine. Everybody is fine and smiling and happy to work on the work on the capital budgeting. So thank you for sharing this picture. We are very happy. Everyone is very happy to be reassured about the fact that everyone is safe and it's good, and it's only a Wi-Fi problem. But there is only group 2 who didn't meet up to the project. I don't understand what you mean. There is only group 2 who did not meet up for the. We are all okay. Yeah, what you mean is that yeah, it was a special year, right? I was not able to come, and you guys, I think when you have the opportunity, you prefer to be physically together to work. I think it's better for you. We had technical problems, but we've been able to finally finish the presentations. So thanks a lot, everyone. I'm stop sharing to now we've seen. So yeah, I'm just gonna say thank you very much for everything, to all of you for the presentations. They're very interesting. Of course, like you, I'm a little bit disappointed that I was not able to come to Vietnam this year to so we can share this adventure together. But we have been able to find a situation despite the COVID. So I'm very happy about that, and I really hope that you enjoy the course and that you have been learning many things. I was very happy. I like this course because with the group presentations, it's my time to see you talking, explaining, and everything. So it's very nice for me to see you be the ones to be active. I don't know if someone wanted to talk or. So if not, okay. So I'm sorry a little bit for because it's late. It's 10:37. I really wish we could have finished earlier. I'm really sorry for this. As you can see, we had some technical issues, and sometimes things like this happen. So we are so sorry. There is the group 3 who wants to share their picture also. So I'm sharing with everyone. This is group 3. So thank you to group 3 as well, and thank you to everyone. So we meet on. So we are done for capital budgeting. So I hope you enjoyed the course. So now the final exam of a previous year is available online. So you can train with the final exam from a previous year. So it's going to be a good training for you, especially for the capital budgeting case. You will have to do it with a pencil calculator. So please train with the exam to use a timing to see how it works. But it should be okay. I will provide you with marks. I will provide you with marks. I will provide you with. Okay. Sorry. I will provide you with marks for the projects next week. That's it for me. So thank you again, and maybe for the corporate tracks, see you on Monday for a new course. It's going to be fun also because a lot of Excel, so it's going to be different. So thank you very much, everyone, for your attention. I wish you the best for the rest of MEBF, and maybe we meet next year when I come to the new batch. So maybe we can have a coffee or something. And have a nice dream, everyone. And don't dream about the number of money. Have a nice Sunday, Mai is saying. And so, yes, I would agree with this advice. So please enjoy the rest of the evening. Enjoy your Sunday. And thank you very much for all the shared work. I really enjoy to work with you. And so good luck for everything which is ahead you. Okay, bye-bye.